Hello, I'm Liz Lumley of Finextra, and today I'm speaking to Kate Toumazi of Thomson Reuters, and we're going to talk about liquidity risk from a data perspective. So how is the market really interpreting liquidity risk management? Can you talk us through it a bit?
So I think there's sort of two sides to it. There's the part that sits more with sort of market risk around the risk if you have to sell your assets, what loss might you have to take if you're selling them in a short period of time rather than a sort of organised fashion as you may choose to manage your portfolio. And the other side is the sort of funding side of liquidity. So if we talk about the market risk side, I think there is data out there, but a lot of our clients are struggling to get as much data as they would like. There are products and solutions out there from a data perspective that sort of say we score this on a ranking of 1 to 10 or whatever that might be, but that doesn't actually help in a regulatory sense because the transparency that's needed to understand how that's been derived, what exactly are the underlying components of that, isn't there if you just get a single number. And I think the other thing we would say is that a lot of our clients, it's fine at the sort of liquid end of the market, there's data around, but clearly that is not where the biggest liquidity risk actually sits in their portfolios. It's at the illiquid end, and so you end up with a sort of double whammy of the assets are illiquid and the data available to support liquidity risk management isn't as freely available in the market. So they end up with this double impact of lack of data, and the risk actually is higher with those assets too.
So what kind of challenges do practitioners face in addressing some of these risks?
So I think it varies a little bit between buy side and sell side. Obviously the buy side are not first participants in the market, so they don't have loads of traders looking at activity with their eyeballs, calling up brokers and seeing what's going on. So they have less access to data in their core businesses, which means they need to take it in through other sources, traditionally feeds. But we know that there's a lack of publication of some of this data, and therefore we see buy-side firms withdrawing from certain asset classes because they just can't model the liquidity risk properly. And for the buy side, it obviously redemptions, the risk of if people pull their money out of a fund, or now that the changes in the pension market in the UK, if people start withdrawing money from those pots, they need to manage, what do I sell, how do I sell it? But if you don't know what price you could actually sell it at within your redemption terms, that can cause problems, and it's very difficult to model, and they end up having to take a more conservative approach than perhaps they would like. On the sell side, I think it's slightly different because you've got regulatory pressures there. So IFRS 13, AFMD all have rules around how you do levelling, and again that really is data hungry. You have to be able to demonstrate why things you consider to be liquid, but again there isn't sufficient data for all of those assets to easily do that. And we also see that there isn't complete clarity in what the rules actually are and how they should be interpreted. So there's a lot of activity going on with the big audit firms to say, is what I'm doing in compliance with the regulation, so that it doesn't get submitted to the regulator and then get kicked up as actually you've not treated these things properly. But the complexity for asset managers is the same. You've also got Solvency II, similar liquidity requirements, but again, not all of them are exactly the same, not all of them are completely clear, but what we do know is they all need a lot of data about what's going on in the market, and the more illiquid the assets get, unfortunately, the worse the data sets traditionally are, so it causes a sort of double impact of less liquidity and less data, so you end up having to sort of treat these things quite separately.
So you gave us a good overview of sort of a lot of the issues facing the industry today. Looking forward, what do practitioners need to do to address some of these challenges?
So at the moment, I don't think there's a master plan. Everybody's struggling with the same problem. I mean, there are regulatory reforms. So MiFID is supposed to make data a little bit more transparent. We're not there yet, and it's not clear exactly how that's going to play out. It won't cover all assets, so it's not going to solve the problem in its entirety. I mean, I think when we talk to some of our larger sell-side firms, there are rules and regulations coming in for them, like the Fundamental Review of the Trading Book, where they're going to have to look back 10 years. They need 24 observable liquidity, in points. Nobody has that data, and I think some of these things will probably drive people to open up a little bit more about the data that they do have. No institution on their own has all the data to solve these problems, but I think what we'll start to see is the cost-benefit analysis between keeping all your data inside and actually having the cost now, because you collectively the data makes, is there, but it's just not in any individual institution. I also think that perhaps this buy side pulling out from markets because they don't have the data, they can't manage their liquidity, that will put some pressure on the sell side over time to make the data that they have more available, because it is there, and in some cases there is liquidity, it's just people can't see it. So I think overall we'll probably see some opening up of people putting data out there and being less concerned about what they're putting out, more concerned about their capital problems that are caused by lack of liquidity or apparent lack of liquidity. And so that hopefully will help lubricate the system so that people can do better management, get on with their core businesses, rather than worrying about how things get set aside because there's just no data available.